Hi, this is Brent with Trade Therapy, and welcome to the Trading Couch. We are talking about Baba. Alibaba was our Clarity Spotlight last week. We're going to dig into this multi-year buying range, this current demand zone, and how institutions set up these vertical breakouts that lock out retail traders, how they go about doing that. We're also going to show exactly how to plan entries and manage profits so you can actually ride the giant instead of selling too early. When people look at Baba, they see an ugly chart. They see it breaking down here. That's exactly what institutions want. They accumulate in this mess after a bunch of fake outs and forced selling. When retail traders are too scared to touch it, that's when institutions are buying it up. Baba spent 2022 and 20 through 2024 in a multi-year buying range with violent shakeouts, but designed to soak up supply. But now it's trading around 106 to 106, 107, consolidating just above this 102 to 107 demand zone. This isn't random support. This is where we've seen clear volume-based absorption, which is professional defense. So we're beginning to see demand greater than supply conditions take hold. We're beginning to see price defending, supporting moving averages, which is the same type of behavior that it presented in the last cycle. So on the weekly chart, you can see these long bases and these breakdowns that flush out weak hands. You can see the moving averages were bearishly stacked. They're now flattening and moving up and supporting. This is the first signal of rotation, institutions moving from defense to offense. They're buying when headlines scare everyone else away. In Elliott terms, this is looking more and more like the bottoming of a corrective wave two. So if you look at a higher time frame, 1, 2, 3, if this is indeed the bottom of a corrective ABC wave two, then this next move is the wave three expansion phase, historically the most violent and profitable leg. If we take a closer look, zoom in into the daily here, this is the messy part that most traders skip, but professionals watch closely. Price has reclaimed its longer term moving averages and is now backtesting them as support. The volume is expanding on rallies while pullbacks show clear absorption. This is what institutions want, a chance to accumulate without tipping off the crowd. This demand zone in this 102 to 107 range right here isn't just random support. It's where big players are laying the groundwork for a potential vertical move. In an environment that's turning supportive for emerging markets in China more broadly, Baba is an attractive entry ad zone here for our swing trades. The sector rotation is real. If we take a look at the yen versus yang ratio chart, so this is the China long versus China short chart, we see clearly flashing a bullish cup and base structure here. Volume is confirming accumulation. Moving averages are stacked and sloping up. We see higher highs. We see higher lows. We see an accumulation range or a buying range with very clear fake outs. This is classic institutional accumulation behavior. Finally seeing price break out above what was previous resistance, now turning it into support. All of the moving averages lining up and now expanding, all looking very confirming, very bullish. This is a background professionals want before they unleash vertical expansions into single man. This isn't about guessing the next candle. This is about planning the entire move. So if Baba breaks out above this 130, 140 range right here, if it breaks out above that with expanding volume, then the next leg is this 166 level here at the 618 extension and possibly beyond. But we're not just going to hold blindly. We manage with cascading stops. Our tier one stops right now are at 102 and 105, and then the next level down is 99 at 100. If it loses 100, we're going to come out of it. Mostly we'll hold a small core position. But this is how professionals ride these giant moves. They don't completely come out of their positions if they're wrong. and they also don't just blindly hold into these. They will take profits back to the moving averages. We're testing moving averages right now. Great time for us to be moving stops up, protecting profits. Should those moving averages hold, then we stay all in. If they don't hold, then we come out a little bit. If you want to learn to trade it like institutions, spotting these accumulation zones before they break out, planning your exits and writing vertical moves with confidence, that's what we teach every week in Clarity. Check out the latest Clarity article for our full breakdown on BABA, the sector rotation, detailed trade considerations for FXI, JD, Futu. It's all in there. That's all the time we've got for BABA this week. We'll see you next week.